Hey folks, Hari Swaminathan. Let's see, the markets opened up nicely, and Netflix also is opened up really nicely around 215 right now. So let's take a look at Netflix because that's what, and I had to put in some orders right away at the open. So what I did was I closed out this 220 call and opened the 220. So, basically what I did there was a vertical spread. So I bought back the 220 call. I'm sorry, I think I said I sold. No, I bought the 220 call back and I sold the 225. Then I cashed in my profits on the 140. You can see today itself it's 4,390. From yesterday it was about almost $3,000. So I cashed in from those two, and you can see the value of this option is zero point 0.03. So I cashed in about $7,400 out of the maximum of $7,600 on this option. However, you can see that this option had a major loss. And so what the way to read this position right now, and of course you can see that my 225 call is profitable. That's because Netflix seems to be going down a little bit. Regardless, my 210 put, which I opened after that, is also somewhat profitable. So basically what we have here now is it's again a strangle, but now I have the one short strike at the 225 right here and the other one at the 210, and Netflix is right here right now. So I think on paper, let me just check these orders here. I think on paper, well, it doesn't give you the P&L on these. So, but basically what I did was um, I bought back this 220 call, paid 755, but then I sold the 225 call and got 580. So I got, I basically paid a debit of about $1.90 for that adjustment. And then I sold the 210 put at 620. Okay, and then I bought back the 140 put at 3 cents. So that's basically what it is. I think right now, if you look at the profit and loss for today, it's 4,200. However, yesterday's profit and loss, we were up by about 2,300. So net, I think we're still down 1,700. But look at this position now. And this position has until next week. So we have a max profit potential of 24,000 on a margin of 95. Max profit potential on just on the existing positions is 24,000. Our lower break even is at around 197 or 198. Our upper break even is at around 236. So you can see it's a nice big room right here, and Netflix is sitting right in the middle. Obviously, we need to manage the trade between now and the next few days. But by doing this adjustment, I think I'm going to be net down right now, as of now, about $1,800 on this position. However, I've positioned myself nicely to take advantage of this position next week, at least in the next few days. So that's where this is, guys. I just wanted to make a quick video on that. And okay, it's a fast moving market. I was rendering that video, and Netflix is moving. So you can see now, the 225 call that we opened, that has a profit of 4,850, and so 4,900 now. That's because Netflix is going down. So what I'm going to do is I'm going to close this one, book this profit, and open up the 220 again. So this is a fast moving trade, and when you do these kind of earnings plays, you have to be ready to do these things, this kind of adjustments. So that's exactly what I'm going to do. Let me see here. So basically what I'm going to do is sell the 220 or maybe even the 215 and make it almost a short straddle. No, I don't want to do that. Let me just do a short strangle. So I'm going to sell I'm going to sell the 220, sell this as a vertical. So basically what that would be is we are selling the 220 and buying back the 225, which has a major profit. And so that I'm going to be picking up that 160 in credit again. Hopefully it's moving quickly, so let me get it done. 1420. I want to get the trade in, which is the most important part. So this is okay. I got it done, so I didn't have to change it. So good. So we booked on this 225 call. We booked $4,600 profit, and then if you add yesterday's 2,300, basically now we've come back to even on this trade. Let's just take a quick look at what the graph looks like and make a decision there. Let's see here. So I've brought the 220 call in. So now the short strike is at 220. The break even on the upper side is still about 234. On the lower side, it's about 198. So even though the graph looks a little small, it's got a lot of room in there. And then, of course, we still maintain our max profit zone of a wide area, which could be anywhere from 12,000 to 15,000 to even 20,000. So we've got a max profit of 23,000. So this is good. I'm going to look at this and let's see. I don't think I'm going to adjust it any further today unless there is some big movement, but this is what we are going now. Hey guys, I made a mistake. I only did for 10 contracts, so I'm going to do for make it a 20 contract situation. So basically, come back to our Netflix, and what we'll do is get to analyze trades, and we have. So I'm going to sell 10 more of the 220 and buy back. And so if we see here, what we have is now 10 contracts. So I'm going to sell 10 more of the 220 and buy back the 225. So let's do another order there and sell it at 140. And it's at 137. Okay, it got done. It got filled at 140. So let's see what our position is. Yep, it's short at 210, short at 220. And now if we look at the risk profile, that's what it looks like. At the lower end, it's 199. At the higher end, it's 231. So let's see how Netflix works out. Netflix is at 210 right now. It's at our short strike price, but you're going to see some minor fluctuations like this. All right. Thank you.